We dismiss history at our peril.
Liberty Nation Radio with Mark Angelides.
Since Joe Biden took office, the economy, despite the protestations of the legacy media, has been in what seems a terminal decline, except for one metric, the jobs market. And yet this oft-touted rubric may not be as clear-cut as the administration would have us believe. We're back with economics editor Andrew Moran to sort some facts from some fiction. Now tell me, Andrew, we've heard so much about how epic the job numbers are under Joe Biden, but it seems to me that there's a number of, let's call them, inconsistencies. What's your take?
Well, first, my apologies to the listeners who have to deal with me for another 10 minutes. But when it comes to the labor market, yeah, I mean, this has been really fascinating to dive deeper into the numbers to show how the headline figures are very different from what's beneath the surface. And I've been trying to find why there's such discrepancies between what's being reported on and, what you see elsewhere in the economy. So the biggest thing right now is the divergence between the establishment and the household survey. Now, the establishment survey is based on, serving businesses, and the household is based on serving households, of course. But the big gap between them is that establishment surveys, they account for multiple jobs. So if one person has 3 jobs, that counts 3 jobs. But the household, if you're interviewing somebody who has 3 jobs, that only counts as 1 payroll. So as a result of this, as of the latest numbers, of course, in December is the November jobs report, the divergence is about 2.6 million, which is massive. And then what's even further interesting is that the Federal Reserve Bank of Philadelphia, it published a report talking about how between March and June or July, the Bureau of Labor Statistics overcounted by 1.1 million jobs. So that's about, if you count as a whole year, that counts at least 10% of the 10 million jobs that's been created. So, and that's just from March to July. I mean, you think of what happens in January, February, and then after that from the rest of the year.
Seasonal layoffs as well, January, February. Let's just reiterate those numbers again, just to make sure we've got this completely clear. So you have an industry number that says that there are 2.65 million more people employed than the household survey says, right?
Yes, correct.
Okay, so when we hear the numbers from the White House, are they using the industry numbers or the household numbers?
They're using the industry number. They use the headline figure, which, of course, I mean, you can't blame the White House. Every administration,
of course, yeah.
Everyone points to the headline figure. The mainstream media does it too. The business investors, everyone does it.
But the reality is then, so when we think about it in real terms, casting aside the jargon, when we think about the number of people in jobs, that has been overcounted for the entire year by more than 2 million people. Is that correct?
Yes, that's correct. If you look at the Philadelphia Fed Bank report, it said the actual net jobs was about 10,500. So I mean that's a considerable gap from what the BLS has been reporting. And
that's the 1 million figure. Yeah, so 10,000 versus 1 million, right?
And but then you look at the other figures too. You look at the number of people who are working 2 or more jobs. That number has been gradually increasing since last year, and it stands today at 7.7 million. And then you look at all the other data points too. You look at the ADP employment report. It showed, for example, last month that that the manufacturing sector lost 100,000 jobs, but the BLS reported that there was a 12,000 job gain in that sector. These things don't add up. And they look at the private sector numbers. You look at the Challenger job cuts. That was 77,000 in November. You look at the PMIs, which keep showing slower employment growth or loss in jobs. So there's something doesn't add up between what the BLS says and everything else.
So I guess the question everybody wants to know is pretty much, let's say everybody across the media, left, right, center, has acknowledged that the economy is struggling, obviously with inflation figures, with a recession. I'm doing a quotation marks there with my fingers, and we will get to the recession briefly in a second, Andrew. But everybody's pretty much acknowledged that the economy's not in a great position. And yet you haven't had many people at all within the media of any side talking about this discrepancy in the job numbers. Now, you'd think, at least for the anti-Biden media, this would be a number that they would be singing from the rooftops.
more conservative media, they are reporting on this discrepancy. So even Senator Rick Scott of Florida, he came out with a press release asking the BLS why is there such a canyon size between the numbers that BLS reported and what's really happening. So I think gradually it's going on that conservative websites are reporting on. It's just it's labor data. Is labor data exciting? Is that going to attract headlines?
It is if it's inflated to such a degree that Joe Biden can coast through the midterms on the back of a stunning jobs economy. It's certainly an important number, wouldn't you say?
But that's why I'm not the managing editor of a website like yourself. See what headlines grab the most attention.
Okay, so Andrew, we've discussed the measurement metrics here being chopped and changed to benefit the party in power, whatever party that is, because as you say, all parties do it. Now, what I'd like to do is get a brief analysis on how this compares to the recession redefinition and inflation rubrics. So, I guess the first question is, inflation, is it happening? Is it going to happen for 2023?
Well, inflation is happening. Just because, the inflation rate goes from 9.1% to 7.1% doesn't mean inflation has been eradicated. Inflation's still going up, but at a slower pace, which is what nobody points out when the administration says, oh, inflation is going down, but it's still, price is still rising. And that's frustrating too. So inflation, it's going to go down to, let's say, 5% by the end of the year or 4%, but that's still higher. It's double than the Fed's 2% target rate.
And will this lead to a recession, do you think, for 2023? Will anybody ever admit that a technical recession exists?
Well, I think it was Fitch Ratings. I think it was Fitch Ratings who said the other day that there was a technical recession in the first half of 2022. Yes, so there was a technical recession last year. This year, I think actually there will be a recession, and some people are going to declare it as a recession. They can't hide from the fact. All the metrics suggest that it's heading that way, and I don't know how you can redefine it or spin it. I'm pretty sure the administration would be clever somehow turning it around. But
well, you could say that the jobs economy is doing really well, and there are lots of new jobs, right? Oh no, wait.
But I think what's important to point out one more thing before we go is the fact that the recession, it's going to happen. But what happens after the recession, which is what I'm really concerned about. My prognostication for the last few months has been that it's going to be returned to the Obama economy, where you have stagnating economic growth, elevated unemployment, and you still have you add on top of that elevated inflation compared to what it was pre-pandemic. So I think that's the trifecta that's going to happen, and that's what concerns me more than this blatant 2 quarters of economic growth.
Do you think that, I may be wrong on this, but isn't the Obama economy, isn't that akin to the Japanese lost decade? Isn't that pretty much the same thing?
Yeah. So if you read my article that I wrote recently, I talked about how the U.S. economy would be replicable to what happened with the lost decade of the 1990s in Japan, which many still say is still going on to this day. Stagnating growth, a lot of zombie companies, too much debt, higher interest rates. Yeah, it's a blend of it's a concoction of many negative factors that will not lead to terrific economic growth in the United States.
Okay, final question. Very, very quick answer here, Andrew. What does all this economic data mean for the average American?
Well, you're paying more, of course. You have a threat of losing your job. There's the old phrase, if my neighbor loses his job, it's a recession. If I lose my job, it's depression. So, and then higher interest rates means higher debt payments, higher cost of living. Paying for everything's going to cost more. Trying to find a job may be harder. So, yeah, the average person is not going to have a great time in the coming years.
A rosy outlook from economics editor, Mr. Andrew Moran. Thank you for kicking us off into this new year with a wonderful, cheery prognostication. Andrew, thanks ever so much for being here.
Thank you for having me.
We dismiss history at our peril.
Liberty Nation Radio with Mark Angelides. Entertaining, informative, and just plain fun. Watch Liberty Nation's The Conservative 5. Produced by conservatives for conservatives. C5's The Left Free Zone. Hosted by Liberty Nation's Lisa K. Donner. Joined by a raucous, irreverent panel of authors. Deconstructing leftist narratives. Debating the hot topics. And remembering to laugh. Join the official conservative safe space.
You only did that to piss Jeff off.
Liberty Nation's The Conservative 5.